Good morning. Welcome to the Heritage Foundation and our Lewis Lehrman Auditorium. We, of course, welcome those who are joining us on our heritage.org website. I would ask everyone here in the house to check about cell phones to see if they've been turned off as we prepare to begin as a courtesy. And, of course, we will post the program following our presentation on the Heritage homepage for everyone's future reference. And our Internet viewers are always welcome to send questions or comments at any time, simply emailing us at speaker@heritage.org. Hosting our discussion this morning is David Burton, Senior Fellow in Economic Policy in our Institute for Economic Freedom and Opportunity. He focuses obviously on tax matters, securities law, entitlements, and regulatory and administrative law issues. His professional career prior to joining Heritage includes serving as General Counsel at the National Small Business Association, Chief Financial Officer and General Counsel for the Alliance for Retirement's Prosperity, a partner in the Argus Group, and other government relations work. In the areas of finance and tax, he held the posts of Vice President for Finance and General Counsel of the New England Machinery, as well as manager of the U.S. Chamber of Commerce's Tax Policy Center. Please join me in welcoming David Burton. David?
Good morning. Our event this morning is called Reducing Tax Compliance Costs and Respecting Taxpayer Rights. Now, tax administration is a subject on which many people involved in the tax policy making process do not, I think, pay enough attention. It deserves more attention than it gets. It's vitally important that we get the structure of the tax system right and that tax administration become a key part of any debate on tax reform. The IRS has tremendous power, and it sometimes, even often, abuses that power. Immediately after Watergate, there were some reforms restricting the ability to use the IRS politically. It's now pretty clear that the IRS has been abused by administrations going back until at least the 1930s, and that continues until the present day. But the first major effort to influence taxpayer rights and the interaction of the IRS with ordinary Americans in ordinary situations was the Taxpayer Bill of Rights that was part of TAMRA in 1988. The Taxpayer Bill of Rights did a number of important things. It established ordinary due process protections for taxpayers. It created what's called taxpayer assistance orders, giving what is now today the taxpayer advocate the authority to administratively enjoin inappropriate collection activity, and therefore they have genuine power within the IRS. Gave people, for example, the right to record interviews. And the history of the Taxpayer Bill of Rights is something I suspect Dan Mastromarco will discuss at some length. It was led by Senator Pryor, father of the current Senator Pryor. And it was a sort of bi-ideological, unusual group of a core of four organizations that made that happen. The ACLU, the National Taxpayers Union, Pete's predecessors, the U.S. Chamber of Commerce, and the Small Business Administration. There have been some subsequent improvements, but that was by far the most important. Now, the current tax system also imposes monstrous administrative costs on taxpayers. These days, that's mostly on businesses. For many taxpayers, over 40% of whom pay no income tax, the tax system has become much simpler. But for businesses, it can be an extraordinary burden, running to the hundreds of billions of dollars. And for some small businesses, the administrative costs actually exceed their tax liability. And for almost all businesses, it's a substantial fraction of their actual tax liability. There's the need to achieve tax reform, but also improve the tax administration so that these costs are more reasonable. Those hundreds of billions of dollars we spend on administering the tax system is money that we might as well just burn. It's a total deadweight loss to society. In addition, the structure of the penalty system in the tax code needs rethought. Dan Mastromarco was a key player in improving the tax penalty system, but it needs to be reformed in a positive way. So these are the kinds of subjects we're going to talk today about. I want to bring to your attention 3 tax policy events we have coming up, and then I'll introduce our panelists. We have on Monday, the 17th at 3:30, an event called The Case for National Sales Tax. Representative Woodall will be here, and the 2 panelists will be Todd McCracken of the National Small Business Association and Karen Walby, Research Director for Americans for Fair Taxation. On December 3rd at 11, we'll have a panel or an event called Taxes and Economic Growth. Larry Kotlikoff of Boston University and one of the finest public finance economists in the country will be here to talk about that. His co-panelists will be Steve Enton of the Tax Foundation, who is with us today, Bill Beach of the Senate Budget Committee, and Curtis Dubay of the Heritage Foundation. The third event that we have scheduled at this point is called Making Sausage, Improving the Tax Policy Making Process. And it's basically about the way that we make tax policy in this country, including our revenue estimating process, distributional analyses, transparency in those processes, definition of tax expenditures, and those sorts of issues. Our 2 speakers there will be Doug Holtz-Eakin, now with the American Action Forum, but the former director of the CBO, and Scott Hodge, president of the Tax Foundation. Now let me introduce our 3 speakers. Dan Mastromarco funded the Argus Group, a public policy law and economics consulting firm, and was a partner there for 16 years. In that capacity, he had the misfortune of being my partner, since we worked together for a very long time. He's originally from Michigan and is today associated with the Mastromarco firm, which is based in Michigan. He's represented a wide variety of clients over the years, Fortune 500 companies, not-for-profits, and small and medium-sized enterprises. He had been counsel to the U.S. Permanent Subcommittee on Investigations under Senator Roth. He was Assistant Chief Counsel for Tax Policy at the Small Business Administration. He also worked as a special U.S. trial attorney at the Department of Justice in the Tax Division. And he worked as Director of Trade and Tax at the Jefferson Group, which was then one of the largest public affairs firms in Washington. He's appeared many times on radio and television, written for a wide variety of publications, both professional and popular, ranging from Entrepreneur Magazine to the New York Times to Tax Notes. He co-edited a Heritage Foundation book called The Secret Chamber of the Public Square, What Can Be Done to Make the Tax Analysis and Revenue Estimates More Transparent and Accurate. I want to just say a couple things about Dan from my personal experience. Dan is, I think, one of the unsung heroes for the American taxpayer. He was very involved in the Taxpayer Bill of Rights, which fundamentally shifted the balance of power between taxpayers and the IRS. He's one of the he's knowledgeable people about tax administration in the country, and I think there's no conservative that knows more about tax administration than Dan. And he also was a key player in civil money penalty reform and rationalizing that system to some degree so that minor foot faults don't have catastrophic results for taxpayers. And lastly, he's been a strong proponent for fundamental tax reform for many years. Pete Sepp is now president of the National Taxpayers Union, a recent elevation. What's it been, 2 months, 3 months? 3 months. He's a longtime member of the National Taxpayers Union staff, having started there in 1988. He's written in a wide variety of publications, including the New York Times, the Washington Post, and the Wall Street Journal. He's been on radio and television innumerable times. He has written a wide variety of studies on subjects including government-sponsored enterprises, Medicare, and tax administration, our subject today. He graduated cum laude from Webster University in St. Louis, Missouri, with a BA in history and associate degrees in legal studies in Germany. Jason Fichtner is a senior research fellow at the Mercatus Center at George Mason University. His research focuses on Social Security, federal tax policy, federal budget policy, retirement policy, and policies to increase savings and investment. He previously served in positions in the Social Security Administration, including Deputy Commissioner of Social Security, Chief Economist, and Associate Commissioner for Retirement Policy. He also served as Senior Economist with the Joint Economic Committee in Congress. He is an adjunct professor at Georgetown and also at the Johns Hopkins University School of Advanced and International Studies and Virginia Tech. He has written for a wide variety of publications as well, including the Washington Post, the Wall Street Journal, New York Times, and of course in a wide variety of professional journals. But probably most relevant for today's discussion, he recently authored a study for Mercatus called The Hidden Costs of Tax Compliance, and his co-author in that study was Jacob Feldman. He has a BA from the University of Michigan, his master's in public policy from Georgetown, and a PhD in public administration and policy from Virginia Tech. Please join me in welcoming Dan Mastermarket.
Thank you, Dave. I take it, given the liberalism with which you gave the facts on my background, I can also fudge some of the compliance cost facts as well. I got to tell you, when Dave first told me to, that he was interested in having me come here, my first reaction was, why? Yeah, I mean, haven't we heard enough about tax compliance costs? I mean, let me give you a quiz. This is something I looked up. I thought it was really interesting. All right, to me it was. Here's what somebody said, and you have to guess the year. All right, and the person. All right, very difficult. While taxation must always be a disturbing power among the laws which govern the distribution of wealth, affecting the distribution unequally, yet this evil is of small magnitude compared with that which results from great or frequent change in the subjects and severity of taxation. A fickle policy in this department tends powerfully to unsettle every kind of business, making its profits irregular and uncertain, and so as to encourage a ruinous passion for sudden and uncompensated gains, instead of the desire for legitimate accumulation of wealth by productive means. Who do you think said that? Anybody? You're about 100 years too early on that one, but it's close. That was the first commissioner of the Internal Revenue Service in 1863 who made that statement. No, well, so now we're talking about, a couple hundred years, give or take, a few decades. So then I thought I'd go kind of fast forward. All right, here's one, all right, from Time Magazine. It's 100 years later. It's a guy by the name of Leo Mattersdorf. I'm sure he's not with us anymore, but he was a CPA, and he represented some famous clientele from time to time. So he talks about how, and this appeared in Time Magazine in that year. From the time the good professor came to this country until his death, he writes, I prepared his income tax returns and advised him of the tax problems. Mattersdorf told the following anecdote. One year, while I was at his Princeton home, now that probably gives it away, preparing his return, his wife asked me to stay for lunch. During the course of the meal, the professor turned to me and with his inimitable chuckle said, the hardest thing in the world to understand is income taxes. And I replied, well, there's one thing that could be more difficult, and could it be your theory of relativity, Professor? And he said, oh no, that's easy compared to the income tax. 1963, 100 years later. So, and then there's a quote, which I won't belabor, by Learned Hand, which is one of America's most famous jurists. So I thought of this, and I thought, my God, now we have the first commissioner of the Internal Revenue Service, 100 years later, America's probably most renowned scientist, and America's most renowned jurist, all saying the same thing. What is it we can add to this? And why do the compliance costs just keep getting worse and worse and worse? Well, let me suggest a goal. I think the reason why nothing's been done about this is because we've gotten really good at making the pain gradual, making it so that we can't see it, that we're effectively numb to it, that it's concentrated on a few, and that those few are able to pass those costs along. So in other words, the pain threshold isn't there. Our goal should be to make compliance costs measurable and understood and transparent and painful to the American people. And by extension, to our elected scions over here, who cause most of these compliance costs through the legislation that they introduce, not just the Internal Revenue Service that they like to kick around. So the questions that I really have are these. One, how much damage does the current system cause? I mean, it's kind of like, on Star Trek. What's the Sulu damage report to the USS Enterprise? And Jason has done a great job there. Second question, why the hell doesn't anybody care? Why don't we care? What does it mean? And third, what can you do to make them care? Well, let's start with this. And I'm not going to, Jason's going to have a lot of discussion on the specifics on the compliance costs, and he wrote an excellent paper on this, which I really fully agree with. It's the hidden compliance costs. That's what we're really here to talk about now. But let's talk about this for a minute. If you go to the IRS data book and you look at this book that they produced, I have a copy. They've done it for a long time. It has these statistics. This is the 2013 data book. And you look at table 29 in here. This is the Internal Revenue Service's view of the collection costs. That's what they say. There's no footnote. It just says collection costs. How much do we expend to collect the amount of revenue that we raise? And they do it very simply. They say, well, we cost the American taxpayer $11.6 billion. And so based upon the amount of gross collection, which was $2.855 trillion, we'll divide that up, and we're wonderful. We can actually produce $100 of tax revenue for 41 cents. That's what Table 29 says. But that's just a fraction of the true costs. It's completely wrong. It's not truth in advertising. Now, I agree that probably is the figure if you look at the budget for the IRS divided by the amount of revenue that they come up with. But it's not really truthful to say that those are the costs of collection. The costs of collection are far, far greater than that because we have the best system in this country that 20-some thousand lobbyists can design, not the best system that economists can design. So let's consider these fun facts to know and tell. And we've heard these before, but I'll just point out some of them here. 240 million tax returns filed in 2013. 2.1 billion third-party information returns. 4 million words in the Internal Revenue Code. 6.1 billion hours, and I think that's the figure that you used last, Jason, in your report, man-hours spent complying. But that doesn't include everything, because that doesn't include the post-filing notices, the examinations, or the collections. And I've handled many cases on behalf of taxpayers. I can assure you that what they file is a pittance compared to the amount of effort that is involved to try to reverse decisions by the mechanism of the Internal Revenue Service. What I find to be very interesting, and I thought I'd point this out, many people probably don't know this, but did you know added to the amazing number of forms is a form for suggesting how to reduce complexity? There's actually a form for that. Form 13285A, so you can fill out that form to reduce the complexity. Well, let's look at the penalties. 1.4 million examinations of returns. Federal tax liens, 602,000. 1.855 million levies. Total civil penalties, 37.9. I've been looking at that data for a while, and I can tell you that hasn't changed very much. Some of it has changed within those civil tax penalties. For example, the failure to timely deposit tax returns used to be about $10 million or 10 million penalties a year, and it has decreased significantly, at least the way they're recording it. Enormous number of penalties. And when David talked about civil tax penalty reform, which was really truly last undertaken in the late 1980s, there were 150 civil penalties. When it began, there were 14 in 1954. When the 1954 code was written, of course, there was a predecessor, 1936. And there's 130 such penalties today. 90.7 million calls and walk-in assistance requests of the Internal Revenue Service, and they were only able to answer 30% of those. So the methodology for determining, well, what are the true compliance costs? Now, we're talking about not the tax gap, not the economic cost, but the cost that is mandated upon the American taxpayer. Not the budget of the IRS, but the cost that we have to endure to comply with our system, is estimated right now, the latest estimate, to be $168 billion in 2010. This type of estimation, by the way, has been going on since 1984 with Arthur D. Little at the IRS. And what they generally do as a contractor with the IRS, what they generally do is they take the burden hours, because there's requirements, information collection requirements, where every agency has to provide this data to OMB at the end of the year, and they have burden hours on each of the returns, and they add those up, multiply by the number of returns that were filed, and then they apply some monetized rate of labor costs to doing that, which is extraordinarily low, about maybe $21 in order to arrive at that figure. And that's 2010 years. That's a workforce of 3.4 million people and greater than the GDP of many countries. Now, you can understand why compliance costs are extremely high because not even the IRS can understand the law. Here are some examples, and this was what the Taxpayer Advocate, which, by the way, was created in that a Taxpayer Bill of Rights, the Taxpayer Advocate has stated were some of the questions that confounded the Internal Revenue Service. They couldn't answer these questions. Here's the complexities. I deliver pizzas for my employer using my car. How can I deduct my car expenses? They couldn't answer it. I received a 1099 miscellaneous instead of a Form W-2 for my job. How do I report this on my tax return? Couldn't answer it. Do I have to report the inheritance I received? Couldn't answer it. So all of this complexity creates this gigantic tax gap, the difference between the taxes owed and the taxes that are actually paid. Now, the tax gap isn't just evasion, which is a specialized term that's defined in Title 26 U.S.C. 7201. It's defined as a intentional violation of a known legal duty. The vast majority of the tax gap is attributable to reporting mistakes. Underreporting income, people don't understand how to file. They don't understand whether or not this is the correct way to do this, and indeed mathematical errors. There's also, of course, about 18 million taxpayers who don't even bother to file returns, and that's part of it. Now, Jason has a later figure for this, but I want to go back to that 41 cents per $100. If we just look strictly at the compliance costs alone, we've increased that to about $16 per $100. And if we look at the tax gap, we've increased it even further. In fact, I'll find this figure for you. In fact, we've increased it to approximately $20 some dollars per 100. And now if we go to the next level, which is the question of the economic loss, and that's the hidden cost that Jason will talk about. You know, here you have a very wide divergence of opinion as to what the deadweight loss is. Deadweight losses for economists can occur when there is an artificial floor put on things, such as minimum wage, or an artificial ceiling, prices put on things, such as rent control. Right? And deadweight loss also exists throughout the Internal Revenue Code when you have 454 members that are sitting there trying to figure out, or 525, isn't that the right number? 535, okay. Trying to figure out how they can best make decisions for the marketplace and change the way in which we do business, what we invest in, things of this nature, which creates deadweight loss. Now, Jason has a huge spread that he will talk about, which is between 148 and 609. If you take just the middle of that particular spread, you've ended up creating a system that now costs not 41 cents per hundred, but $45 for every $100 collected. That's the true compliance cost of our system, $45. That's 100 times what is in Table 29 as 41 cents worth. $978 billion of wasted research. So now my next question is, why doesn't anybody care? Why doesn't anybody care about this? And I think the answer is we really haven't, hearkening back to what we said in the beginning, made this very clear to the American people. They don't see it. They don't feel it. They don't understand what this equates to. This is a huge amount of money. This is a good year of economic growth. This is beyond the GDP of many of the world's countries. We're talking about a massive amount of money. If we put that into a cure for childhood diabetes, cancer, pick your poison, space exploration, what could we do with that money that we just literally throw away? Well, the problem is it's a real self-perpetuating system. There's an iron triangle here that goes on. There's the lobbyist that exists. There's the members of Congress. There's the Internal Revenue Service that enforces it. There's businesses that don't really care whether everyone is better off, as long as they, on a relative basis, are better off compared to their competitor or some emerging industry that might threaten them. Only a third of the American taxpayers itemize, just a third. I can understand why when you look at how complicated it is. And some of the businesses just plain game the system. So my question becomes, what can we do about this? Because that's the ultimate issue here. Is there anything we can do? David asked me to address some of the things that we had worked on in the past. But before I do that, I want to throw out some ideas. Now, I've been in the real world trying cases and helping people with their taxes and litigating various issues from time to time. But I did take some time to look at what a next taxpayer bill of rights or a next idea of that general nature might look like. What might it contain that goes in the direction of truth in advertising the costs of compliance and maybe pushing them back a little bit. Maybe pushing them back. Well, how about number one element, require truth in advertising? The Internal Revenue Code requires the National Taxpayers Advocate to submit each year a report that identifies 20 of the most serious problems encountered by taxpayers. How about if we required the Taxpayer Advocate to submit each year the actual compliance costs that we have to endure to comply with our current system? That's not required. The last time she did this, which was in 2010. How about requiring the IRS to disclose the burden of the tax system? And who pays it? On their actual Form 1040, or maybe on the instructions. How about requiring them to put that on there? Just like cigarette packs say, you're going to die if you smoke this. All right, have the IRS put on there. This is the cost that is imposed on the American people. Is that, if you can't do the economic loss, at least you can do the compliance cost component of it that they could put on there, not this misleading 41 cents per 100. And by the way, the IRS says they can do this. They can't push back and say, we can't do this, because they've gotten a tremendous amount of money to develop various models. The individual taxpayer burden model is one, the ITBM. The small business burden model, the SBBM. And they have a new one that they've developed, the BTBM. And here's what they say. The IRS will now be able to analyze the burden impacts of proposals to revise the tax code or IRS administrative procedures. For the first time, the burden implications of achieving policy objectives through new legislative and administrative tax proposals can be estimated and considered before the changes are adopted and implemented. That's what the IRS says. So if they can do this, if they're claiming they can do this, well then why not require them to disclose the distribution of these costs upon businesses, as opposed to us struggling to figure this out every few years and then getting into a massive debate with liberals and others on the other side saying, oh, you've overestimated the amount of compliance costs. That's not the correct amount. How about having the government tell us what it is? That's a good solution there. Now listen, I've looked at this Equal Access to Justice Act provision that applies. That was also part of the Taxpayer Bill of Rights early on. That applies to the IRS. It's called attorney fee shifting statute. It's 26 U.S.C. section 7430. This thing is a joke. All right, I really don't think that very many taxpayers have ever been able to recover a dime from the Internal Revenue Service when the IRS takes an unreasonable position. And by the way, I'll just give you one example, although there are many that you could look at as an intelligent person examines that statute and you examine what could be changed in there. Consider that the service requires a complete exhaustion of administrative remedies before you can recover a dollar from them in terms of the fee shifting statute. So what they could do is simply impose the maximum amount of administrative costs upon you and bankrupt them. And by the way, you get $180 an hour, which I think in some jurisdictions is probably what they could pay public defenders, not tax lawyers. Here's another provision, reciprocal clawback provisions. How about that? You know, the tax court can actually impose a $25,000 penalty on a business if they find that the proceedings before it have been instituted or maintained by the taxpayer for delay. Why don't we have a similar provision for the IRS? This is similar to what we battled earlier when the IRS had two different interest rates. One that we would pay them, which would be 2 points more than the amount that they would pay us. Why is it skewed in their advantage? Here's two more that I think are extremely important. I left them for the end. Three, really. Budgets of the IRS. How about a regulatory pay-go system? If they can determine how much their regulations impose upon the American people, then why not cap that and tell them that's what you have and you can't have any more? And if you want to have more, you either have to go to Congress so they can be blamed for this budgetary regulatory cap, or you have to get something off the books so that throw something off that's costly so that we can develop something again. And the other thing I want to point out is this. How about requiring cost-benefit analysis of the IRS regulations? That is not a bad idea. That's a very good idea. Some presidential candidates have recommended that idea, and it was in H.R. 2122, if anybody wants to see it. Because the service's current policy is that, quote, it's not necessary to justify, unquote, its reasoning when regulations are issued. That's Internal Revenue Manual, 32.1.5.4.3. That's what they say. We don't have to justify it. So require them to justify it, because what would happen then is that lawyers can challenge the IRS rules in court. That's the important thing, because we can say you didn't do a cost-benefit analysis, or you didn't do it right, just like SBREFA and the Regulatory Flexibility Act. And one more thing, Dave, if I can, and that's that you have this complexity analysis. They're kind of like, these tax reform committees. You want to kill something, you put it in certain things, all right, and you make it look like you're really doing something. The Joint Tax Committee is actually supposed to do a tax complexity analysis of legislation. They're required to do that. That's Section 4022 of the Internal Revenue Service Restructuring and Reform Act. Have you ever read any of those complexity analysis that the Joint Tax Committee does? Man, it's absurd, right? I don't think, and no offense to anybody from the JCT that's here, that they should have that responsibility, actually. I think that should be properly the responsibility of the Joint Economic Committee or some other group that's not so close, at least from a perception standpoint, of the fox guarding the hen house. Those are my ideas on that. And I got to tell you, if there's anybody, how many here are from staff on Congress? Anybody? One, two, couple, three, four? Okay. We did this before. In fact, that's where I first met David. And Pete was involved in this too. We, for example, developed the first Taxpayer Bill of Rights. We had liberals and we had conservatives here. And we had senators like Senator Bradley who made fun of it to begin with, that then as it went along, loved it, jumped on board the bandwagon and said, oh, this is my idea. You can do it. It can be done. All right? And in terms of tax penalty reform, that can be done. The one thing you got to realize is that with all of this stuff, the people who are your greatest proponents are the American people. Politically, this stuff sells. And we were able to get it done before. In a different world, mind you, but we were. And it's something that could be done now if you think like engineers. What's the problem? How do we solve it? Good policy makes good politics. Thank you.
I'll deliver my remarks from here. I apologize for clearing my throat rather constantly. I think I've got a case of laryngitis coming on from someone who sat next to me on the train yesterday. I think he had an IRS badge on, but can't prove it. I want to talk a little bit not just about the economic costs of our tax system, but the human costs. 6,000 years ago, there was an inscription on a tablet unearthed in modern times in Mesopotamia, modern-day Iraq. It said, you can have a lord, you can have a king, but the man to fear is the tax collector. 6,000 years ago, that was written. Fast forward to 2001, there was a poll by McKenna Research of 600 adults, found that by a 50 to 32% margin, more people feared getting an IRS audit notice in the mail than getting anthrax in the mail. The height of the anthrax scare. Two different civilizations, two different kinds of tax enforcement regimes, one dependent largely on the lash, pay up or die, the other dependent on a whole lot of other tools, yet I think there's a relationship here, and it's intimidation. How does our system achieve intimidation? Well, some would say, yeah, there is the threat of imprisonment. Sometimes people even end up killing themselves over intimidation and problems they experience with the IRS. I know that because my second day on the job in 1988 with NTU, I found I was running a suicide prevention hotline trying to talk a guy out of shooting himself over a tax problem. I was 22 years old, and suddenly the 200-level psychology course I took in college meant a lot. These are the human terms we have to worry about when considering complexity in our tax system, and I think there's really a 5-step relationship between complexity in our tax system and taxpayer rights. Think about this. When laws are vague, citizens fear that they can never really be secure in the knowledge that they're complying with them. They'll spend ever greater amounts of money trying to buy that security, that peace of mind, and they can't really do it. In this tax filing season, do you remember the story of Donald Rumsfeld? He sent a letter to the IRS along with his tax return, and I quote from it, "I have absolutely no idea whether our tax returns and our tax payments are accurate." And he paid a professional thousands of dollars to prepare his returns. Step 2, tax preparers and computers whom individuals trust to try and provide that security at considerable expense can't keep up with the changes in the tax laws. How do we measure that? Look at what the Government Accountability Office did this year. They sent 19 of their auditors undercover to 19 different tax preparation centers with a very simple or relatively simple tax return, trying to get them to come up with a common answer of the refund that the individual, the hypothetical individual, was owed under this return. Only 2 were able to get the supposedly correct amount under the return. I say supposedly because just as with previous undercover investigations like this, JCT, IRS, and other officials could not necessarily agree on what the right answer was to that hypothetical situation. Incredible. Step 3, the government itself becomes incompetent at managing its own revenue collection machinery. This shows up, I think, in IRS-related identity theft cases. It's an incredible statistic. In the past 3 years, IRS-related ID theft cases have climbed to 640,000 instances, quadrupled in 3 years. It now takes the Internal Revenue Service bureaucracy an average of 312 days to resolve an individual's ID theft case, almost a year. That, I think, is a measurement, again, of government's own inability to deal with tax complexity. And what's the government's response to these problems? We need more money, we need more power, and we need more centralization. That shows up in really dumb solutions to the tax complexity problem, among them the so-called return-free system. This is a proposal, unfortunately, that wound up in the 1998 IRS Restructuring and Reform Act, which would allow the Internal Revenue Service to complete returns for individuals, send them the return, and say, if you agree with this, sign it. Now, the IRS says there'd be plenty of safeguards here. Individuals could just chuck the return in the trash, prepare their own. Imagine getting something like that in the mail from the IRS. I'll refer you back to the poll about anthrax. And you get the idea. This would be yet another tool of intimidation, not a solution. The 5th consequence here in this cycle is citizens suffer the loss of civil liberties and economic freedom. As a result, we've had 3 separate packages of taxpayer rights improvements in 1988, 1996, 1998, and still we're getting pushback and retrenchment. Take a look, for example, at the scandal over the IRS's nonprofit division. We could talk a day about that, but look more closely at the recent revelation in the New York Times that the IRS is once again leaning very heavily on civil asset forfeiture laws to do its dirty work. Between 2005 and 2012, the number of seizures under that procedure has quintupled. The IRS says we're going to clean up our act, we're going to issue clarifications to the field, and that's going to make everything just hunky-dory again. Maybe in this area, but something else will crop up that will show us we have a lot of work left to do here. My organization publishes an annual study called A Taxing Trend, which provides a lot of figures about complexity in the tax system. I'm not going to recite a whole bunch of them because Jason has some much better data, I think, much more comprehensive. But just 2 points I'd like to make about complexity because I think it bears upon the concerns we have for taxpayer rights. If we were to convert that 6.1 billion hours of labor, which is a very conservative estimate spent on complying with the federal income tax system, into a number of employees with working 40-hour weeks, 2 weeks a year off, that would be 3.05 million employees theoretically working full-time on this area of tax compliance. That's more than the number of elementary and secondary school teachers in the United States combined. Imagine a workforce like that. Just like Dan said, the wasted effort and time. Take a look also at the paperwork load that the federal government generates. 3/4 of it comes from the U.S. Treasury alone. No other agency accounts for more than 6% of the total paperwork load of the federal government. We fear the FCC, the EPA, the Department of Labor, and the burdens it imposes in terms of regulations. They don't come close to the Treasury, which is mainly the IRS. So, this cycle that I spoke about in 5 parts is something that National Taxpayers Union is particularly concerned about because of the human impact it has on individual taxpayers. The obvious solution, scrap the tax code completely, institute something like a flat tax or a fair tax. Well, we can all go home now, that's the solution, and Congress will pass it and everything will be fine. I'd love to think that. We'll keep working for it, but we need a plan B. We need a list of reforms that can help taxpayers on the ground in the interim to push back against the biggest excesses of the IRS. I'll suggest a few. Most of these were from some of the work we did in 1997, the National Commission on Restructuring the IRS, and the subsequent legislation that passed in 1998. These reforms were generally left out of that package. One, picking up on Dan's point, let's have a quadrennial simplification process, something that would occur every 4 years using volunteers from the tax preparation community to sift through the code, take out the most egregious provisions in need of simplification, present it to Congress in some kind of BRAC-style package. You vote on the whole thing, up or down. You get embarrassed if you start picking at it on national TV through C-SPAN. Maybe that would convince Congress to do something constructive and take the advice of professionals in simplifying the code. Second step, adopt S725, the Small Business Taxpayer Bill of Rights, sponsored by Senator John Cornyn. This is built upon the experience of shortcomings in the 1998 IRS Restructuring and Reform Act. It does things like improve innocent spouse rights. In other words, when one spouse ducks out on his or her tax liability after a divorce and leaves the other spouse to contend with it all. It also establishes things like alternative dispute resolution in smaller tax cases, a way for business owners especially to try and get their tax cases resolved without having to pay a lawyer at $400 an hour to fight it. Most of them don't. I don't know of really any who do. Third step, we should consider a citizen review process for the Internal Revenue Service. This was an idea brought up by a criminal justice professor from University of Nebraska. He was proposing a 2-part system where you have an internal office of citizen complaints that would receive complaints about mistreatment and misbehavior from citizens within the IRS and make recommendations for disciplinary action. You'd have an external component called the independent complaint auditor who would keep track of the internal component, making sure that it wasn't unduly influenced by the IRS bureaucracy. This component would also report annually on the biggest problems that people were experiencing in terms of mistreatment by IRS agents. This wouldn't be like the taxpayer advocacy panels, wouldn't be a way to resolve actual tax problems. It would work like the citizen review boards of big city police departments that exist in many places across the country. The final thing I want to talk about is providing additional court remedies. You know, the Anti-Injunction Act still limits the ability of citizens to stop the IRS from doing something stupid before it happens. Citizens generally, in most cases, have to be injured before they can even try to take the IRS into court and recover damages, which they hardly ever do anyway. The Declaratory Relief Act allows citizens to file suit to get a court to declare their rights, but there's a little clause in there that says, quote, except with respect to federal taxes. These two laws need to be changed to allow citizens to more effectively enforce their rights in court. Lots of other good ideas, but I would wrap up by saying just because you can't do everything doesn't mean you stand by and do nothing. Congress can take steps now, regardless of what tax system we ultimately wind up with, to ensure that taxpayers not only have rights, but have remedies. And remedies is what we need to talk more about in this debate. Thank you.
Jason?
So I know our time is short. That's the problem with going last. You got to do cleanup. So what I'm going to do is try to give you just some holistic statistics, talk about what the study we did, why we did it, some things to consider, and try to still have a few seconds left for questions before you guys have to run back and get back to work. When thinking about compliance costs, what's important to consider is think holistically. Because compliance costs are not just the direct costs we pay when we pay our taxes, or as Dan was mentioning, the cost that the IRS has to bill for the administrative services. There's a lot of things that go into compliance. It's the economic growth we're losing. It's the vacation not taken, the consumption. It's the business not started for compliance. I invested in two friends' businesses, which resulted in me getting K-1 forms as part of the business, which means I had to file a partnership return, a 1065. One was in North Carolina, one was in California. I had to file a California state return, even though I didn't live in California, because they required it while North Carolina didn't, which led to more compliance costs, more costs for my accountant, more money out of my pocket. When you go through a background check, they ask you, do you have any business dealings? You've got to mention your business dealings. The FBI then goes and interviews your partners. It becomes a big deal, and now people come to me and say, do you want to invest in my business? And I say, no. It's not worth the compliance costs and the hassle to give you $5,000 or $10,000 to invest in your business, because of what I have to go through when it comes to filing the extra paperwork. So there are businesses not started. And this is just a very, very small example. Take mine and magnify it across the country, and you start seeing why compliance costs are hidden and start adding up. And we started doing our study. We looked back at a lot of historical studies that were done, and it's very hard to put a time value on what is your time worth. So we have these ranges, and that's why they're so broad. So to give you an idea, though, when you start looking at Congress, lobbying costs, and things that go into this, we're trying to do more with the tax code than just raise revenue. There are a lot of tax expenditures. There are a lot of social welfare programs. There are a lot of normative values we put. Do we want to actually promote energy subsidies? All these things come with costs that also bias one investment over other. Those are other costs. So the price of really the tax code, all these special provisions, is higher than just the revenue loss, as Dan said. The cost of true compliance exceeds the obvious time and money expended in tax preparation. We looked at a bunch of studies and looked beyond just the accounting costs. We took a broader look at the hidden costs, including the implications of taxation, lobbying to gain and maintain tax advantage, economy-wide costs as tax incentives alter work, leisure, savings, consumption, production, investment, and lost revenues as a result of taxpayer noncompliance, which Dan also mentioned. So when we did this study, we found there was basically accounting costs, economic costs, and then lost revenue or tax gap. If you add them all together on the accounting and economic costs, you're getting upwards of $1 trillion a year in lost costs. That's a lot. Then you add the tax gap, a little over $450 billion, you're at $1.5 trillion. The government brings in now about $3 trillion. So you're losing about half the revenue in some ways, 50% of that. There's still additional foregone economic growth. As Dan mentioned, imagine what we can do if we had another $1.5 trillion of our time, our money, our investment, where it can go. Those things become very important. And when you start breaking this down, it's again, there's accounting costs between $67 and $378 billion a year. Man hours, it adds up to about 6 billion hours just to comply with filing your return, the paperwork, et cetera. That adds in, and Pete got to this, about 3.4 million people. I mean, you think of the man hours. That's larger than the population of Chicago, Houston, and Philadelphia. Imagine you put that to work actually in the economy, what we could create with that. The economic costs, between $148 billion and $609 billion annually we're losing in economic growth. Lobbying costs. It's very hard to sort of gauge what is lobbying versus what is education. People just go up and try to inform members. But lobbyists spent nearly $28 billion between 2002 and 2011. These come with costs. As people lobby for special privileges, that means we bias investment in one place over another. That also costs the economy. And again, there's also lost revenue. And the reason we did a paper called The Hidden Cost of Tax Compliance. It's available online at mercatus.org. And I know we're running out of time, so I won't go through all the things we did, but it's worth looking up. And the reason we're here is because part of this is to get a message across that when we look at tax reform, part of the issues that come with the costs are also the temporary nature of a lot of our tax system. What the old joke is, there's nothing more permanent than a temporary tax break. They seem to go on and on with the extenders. But if you're a business, you can't plan if you don't know what the tax code is going to be tomorrow, next year. If the current system you're under, whether it's expensing, accelerated depreciation, or the marginal tax rates are going to change next week, next year, 2 years. So permanency creates uncertainty. Uncertainty creates paralysis. And that paralysis is what we're seeing now in today's economy. People wonder why the economy is not growing back as fast as it was after the recession. It's because it's paralysis. People don't know what's going to happen tomorrow with the tax code, with the Affordable Care Act, with the regulations that are coming in. And we need to think very holistically about what costs are, because it's more than just the direct costs of what we pay to the government and what the costs are for them to collect it. There's these economic costs. And a lot of this becomes to the importance of looking at lowering marginal rates and also broaden the tax base. Because when you narrow the tax base, you create various incentives to gain one part of the system over the other. And you result then in higher rates to get more revenue, which further distorts and creates further deadweight loss. So we really need to look at not just the holistic approach to tax reform, but how do we broaden the base and lower the rates, which then lower the deadweight costs, and then again, the incentives to cheat or not comply through lower tax rates.
Thank you. We have time to take a few questions from the audience. Please state your name and institutional affiliation and speak into the microphone.
Yes, my name is Hermes Levy, and I'm from the OWS. I have just two questions. The trillion lost, is there any relationship between them and the national debt? And the other question is there is any way to dissociate tax, healthcare tax with the IRS?
So on the first one, the level of debt, the U.S. debt,
Yeah.
One of the things you have is when you create more debt in the economy, at some point you're going to have to raise interest rate costs, which is going to crowd out private investment. The deadweight loss for taxes is higher than debt, but at some point you've got to pay that debt off. Where does that come through? Does it come through inflation? Does it come through monetary policy? Does it come through higher taxes? All of those affect economic growth, so there's cost to that too. And right now, the unfortunate problem we have in the U.S. government with policy today is that if you borrow money, you're putting the decision off on how to pay for it down the road to somebody else. So we're sort of delaying the costs we know are here. But if you're a business, what do you think your business environment is going to be 10 years, 20 years from now when that debt comes due? And that, again, creates some paralysis in business. It's hard to actually quantify the cost. There's definitely a cost with it. And then I think the other question was can you do the Affordable Care Act and the questions for compliance with the IRS? So when we did this study, we had not yet, the ACA effects were not yet incorporated in how you comply. We're seeing just right now, labor effects alone from the ACA are huge. The deadweight loss for people, and there's a study put out by Casey Mulligan that looks at, it is more advantageous for someone to work basically, say, 29 hours a week and get the subsidy than it is to actually work 40 hours a week. And so you're basically incentivizing folks to work less. That creates less productivity, less economic growth, less tax revenue. Trying to quantify that's the next thing we need to do, but it's going to be a huge, huge cost.
Next question. Sir.
Yes, sir. My name is Kami Bhatt. I'm with the Pakistani Spectator. And my question is, if you Google Mr. Norquist, you would find many articles, but most of the people who comments on those articles, they oppose and they give the impression that somehow it's a good thing to pay tax, otherwise government cannot run its business. So my question to you is this: do you think those people who oppose these kind of organization, are they operated by a certain organization, liberal organization, who oppose people like Mr. Grover Norquist, or they are just randomly, I mean, they are true people and they are expressing their true feeling that we should pay the tax? And the second question, hasn't TurboTax make it easier, the difficulties that you just explained? With TurboTax, it's not very difficult to file tax for individual. Thanks.
Well, the filing of a tax return is not difficult primarily because the costs continue to get externalized for the average person. I mean, there was an AP poll this year that's, I believe the margin was 59% of respondents thought that filing taxes was relatively easy. I would contend, and my colleague Doug Kellogg came up with this excellent analogy. If you asked a person whether changing the oil on their car was easy, a majority of them would probably say, well, yes, I just drive to the Jiffy Lube, pay $50, and it's done within an hour. The actual task of preparing the return and filing the taxes is not really always incumbent on the taxpayer. It's a preparer, it's a computer, it's some other kind of entity preparing the return. And so just because the individual responsible for the return might be able to punch a few numbers in or hand a bunch of records to someone and say, here, take care of it, doesn't mean there aren't costs. And if the return, of course, has errors on it, then the IRS comes back to that taxpayer. So I would say that there are genuine costs here.
I think you also need to think, again, the idea is to think more holistically. Don't just look myopically at a direct cost of what it might cost you to file a return versus somebody else. We also now normatively have taken off so many people off the tax rolls. They don't have to file. And what that means is you're placing the burden onto other people who have to then file. So you're making the cost of government, the large cost of government, being borne by a smaller and smaller share of society, who then now respond to that burden by saying, now I'm not going to take that extra step to create a second business or invest in the first place because the marginal tax rates are too high, which means you don't get economic growth, you don't get job development, and the very people who are no longer paying, who say, I don't have to pay for government because it's free for me, are now actually bearing the cost through less economic growth, less wage growth. And we haven't done a good job telling that story about how this cycle works, and that the cost of compliance, again, is not this direct cost of filing a return. It's the impact it has on the economy, economic growth, and the feedback loop, which very much affects the very people who either don't have to file or just think it's low cost. The same thing comes, we have a debate now on corporate taxes. Why do we have a corporate tax code? Corporations don't pay taxes. People pay taxes. And so what you see is, depending on who you think bears the burden of the corporate tax, if it's actually wages or workers, then by arguing that corporations should pay more, what they're saying is we need to pay more ourselves because they're going to bear it through the cost of less jobs or less wage growth. We got to do a better job of selling the story holistically about how taxes affect the economy.
You know, I'd add one more thing, if I could, to what your question was. Just this very simple observation. Many of us in this room probably know this. You know, there's a difference between tax reform and tax cuts. But a lot of times the two are very confused. Right? You know, there are many individuals who believe that we overtax people. In other words, we take too much of a share of the economy in terms of taxes. That is a distinctly different question, although the two are immensely related because there's overlaps in effect between the two. Between that issue and the issue of if we have to raise X number of dollars, what is the best method by which we raise that money? And because not all tax cuts are created the same. Not all tax increases are created the same. And, you know, that's an entirely different discussion, but Jason and Pete were also alluding to the broadening of the base. That's what we're talking about there with tax reform, you know, as opposed to the level of tax. So somebody like a Grover Norquist group usually talk about the level of taxation, not about, despite the name, actually reform of the method by which taxes
They do both.
are taken.
Steve?
Steve Enton, Tax Foundation. Just kind of a clarification. David mentioned the next program in the series here on the fair tax, and Pete's mentioned fair tax and flat tax and so forth. These tax systems are basically consumption-based. It's a narrower base. But the current system of the income tax double taxes saving and investment, or even triple taxes them. When Jason is talking about broadening the base, there are a lot of peculiarities within the income tax system where one person gets a break in a similar situation, another person doesn't. These quirks where some industries are favored over others, this is where you might consider broadening the base. But overall, we need to shift from the broad income tax base to a base that is not biased against saving and investment, which the other gentlemen are referring to. So these are two separate questions. Broadening the base is only within the context of getting rid of loopholes. When you look at the tax expenditure tables, and they tell you that accelerated depreciation or pensions are a tax expenditure, you don't want to eliminate those, because those are in effect offsets to what otherwise would be complete double taxation under the income tax. So Jason's clearly talking about the bizarre loopholes that discriminate between one action and another, activity and another within the industrial sector, not the bigger question of do you want to tax consumption or do you want to tax income. I think that's what's going on up there. I just wanted to make sure that was the case.
Yeah, no, and you're also, the other thing too is, right now, as you know, we're stuck in an income tax world, and you're right, we need to move to a consumption tax. So no argument, I totally agree. Also, the idea of a lot of the things you brought about the tax expenditure budget, we have a lot of philosophical objections to what should be in it. And when OMB creates the tables, actually it changes by presidential administration what they consider to be a tax expenditure or not. I don't think there should be a corporate income tax. I think the corporate tax rate should be zero if you even have a tax at all. And so some of the things you're talking about with base broadening, they shouldn't be in the tax code in the first place because you should have either expensing or no corporate income tax. And you're right, it's getting rid of the loopholes on the individual side if you stay with income. Otherwise, you need to go to a consumption base.
In the special analysis section of the 2009 budget was the last time when the OMB said, now, wait a minute, let's take this tax expenditure table and say, if this were a consumption tax, would some of these tax expenditures disappear? Because they're really not wrong. And they had the side-by-side comparison. And you can go to that budget 2009 and go to that section, get a very good course on what should be considered a tax expenditure, even under a consumption base, and what should not be considered a tax expenditure under a tax form. One thing you might do in your next version of the study, because you're doing great work there, if you took that annual loss of about $1.5 trillion and took a 3% real rate of return, and asked what's the lump sum value of that, it's about $50 trillion. And you could compare that to the Social Security unfunded liability, compare it to the national debt, it's huge.
Yeah.
That is
Yeah.
good.
Yeah.
All right, we have time for one more
Thanks,
question if somebody wants to ask another question. Okay. Well, thank you very much for coming, and we'll see some of you next on Monday. Thank you.
Thank you.
Thank you.
Thank you.